So do you like what you've seen so far? I mean, there's no number on this card, which makes it unusual, and they're encouraging people not to swipe it. You get the cash back if you're interacting directly on Apple Pay, not swiping. Are those, I guess, incentives aligned with what you're looking to do at Mastercard?
Well, there's a number of reasons we're really excited about this program. I think first and foremost, it represents a first for us in terms of putting into the marketplace what we're calling a digital-first card. So it's utilizing Mastercard's technology in conjunction with Apple and Goldman Sachs as the partners that are bringing this to market to really create a new kind of consumer experience.
So why is that good? Why is digital-first good?
Well, because it aligns with the way so many consumers are living their lives, and in particular, consumers who identify closely with Apple's brand and the Apple ecosystem. They are very closely connected to those devices, and those devices are an important part of their lives. They shop, and when they shop, they transact. And we want to be able to have payments capabilities closely aligned with the way they're living their lives. And that is an important reason why this digital-first capability, convenient and secure at the same time, is coming to market with this.
How much more secure is this with no printed number on the card, kind of within the wallet app? You can get a one-time use number, then it cycles through, so people don't have to worry about somebody copying down the number.
Yeah, not having a card number on the physical card, if the consumer chooses to get that helps certainly, because somebody can't just write that down and take it. But the real key to the enhanced security here is happening behind the scenes, where we're tokenizing the card credentials. So we're taking the digital representation of that 16-digit number and scrambling that into a code that only we and Goldman Sachs can recognize. We know where it's meant to be used. We know it's meant to be used with that Apple device. And if it shows up somewhere else, we know it's been compromised and we can kill it, which is what is really enhancing the security of that product.
Some argue that the card is an indictment of the industry's history about late fees, charges, interest payments, right? They're trying to get people to understand interest better. How is it, what do you think about that? Is it a criticism of what we've already built in this business?
I wouldn't call it a criticism, but I think anything that brings more transparency and more awareness to consumers so they can make better decisions about how to manage their financial affairs is a good thing. There's certainly a lot of information that banks provide to consumers around their payments activities, their payments due dates, interest obligations, etc. Apple's taking that another step further by integrating a lot of that into the operating system of the phone to make that very easily accessible, and has added their own twist to that in terms of how they'll provide that level of transparency to consumers. But I think anything that helps consumers make better decisions is a good thing.
I want to shift gears a little bit and get your take on the U.S. economy right now, right? Because we saw this sharper than expected drop in consumer sentiment last week. We're starting to get some retail earnings. Some of them are softer than expected. You're seeing names like Kohl's trade lower on that. We know that so much hinges on the consumer right now. How would you assess the health of the American that's going out and making purchases and what that means for the economy?
We continue to see consumers showing up well as it relates to consumer spending, and the fundamentals that underpin consumer spending are with low unemployment rates and still relatively high degrees of consumer confidence are translating into healthy levels of growth in retail spending. So in the second quarter, we saw overall retail spending grow by about 3.2%. That trend has continued into July. That's measured by our Spending Pulse estimates that measure overall spending in the U.S. economy across all tender types, all forms of payment. So we continue to see a healthy level of spending. That's moderated a bit from last year, so it's against some tough comps. We had some very high growth rates last year in consumer spending, but the fact that the consumer is still showing up and voting with their wallet and continuing to spend, we see as a positive sign.
Closing it out on Apple Card again, are we going to see anybody else do this? Because word was that Visa was wary about getting into this partnership. Others, other than Goldman Sachs, maybe didn't want to take the kind of risk that Apple wanted to put on the table. Is this going to be a proof we're going to see other numberless cards with these kinds of no-fee deals or no?
Well, I think it's a unique, Apple presents a unique set of circumstances because of the ability to integrate the card with the operating system on the phone. And that's an important part of being able to deliver a lot of that value proposition. Others could potentially seek to do that. I can tell you we were very eager to work with Apple on this program and very eager to work with Goldman Sachs on the program, and we're excited to be their partner.
Really quick, there's a piece done a couple weeks ago about consumers taking out personal loans to pay down credit card debt. Isn't there a disconnect between credit card interest rates and interest rates in general?
Well, as you know, Mastercard's not in the interest rate business. We don't set rates. We don't make money on interest income. Banks set rates as they see fit, and they manage that across the breadth of their consumer portfolio. So